Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the market participants received an update from the RBA Governor Phil Lowe on Tuesday after comments implied Australians should be prepared for more interest rate increases. At the Sydney American Chamber of Commerce event, Dr. Lowe said, "So we don't see a recession on the horizon, but if the last 2 years have taught us anything, you can't rule anything out." Along with that, we got the RBA June Monetary Policy Minutes, and that showed that the board members remained committed to doing what is necessary to ensure that inflation in Australia returns to the target over time. Along with that, the US was absent in observance for Juneteenth, which was observed on Sunday. It is known or called the Black Independence Day or the Jubilee Day. It will be observed for the first time in the US history. Looking ahead though, eyes now turn to the US Federal Reserve, Jerome Powell, on Wednesday and Friday, where he needs to justify last week's biggest rate hike since 1994 in front of the Senate Banking Committee. Looking at the Australian dollar now, as the market slowly picks up after the US absent, is the technicals are still remaining somewhat bullish for the Australian dollar. I do feel there is further upside towards 69.80. Now a clearance of 70.15 would give further scope up to 71 cents, which I still hold as a broader view. Any pullback should find support from the bottom side around 69 cents, with the key level seen at 68.5. The euro also holds to a relatively firm stance, or more to the fact, on a front foot, and therefore could see further gains as the US dollar, which measures the greenback strength against a basket of 6 major currencies, remains somewhat lackluster as the US was away on Monday. Still, with the eyes on Fed Powell, the market will be a little bit whipsawed as we get closer to Wednesday. But overall, I feel the upside target for the euro remains at 106, figure 15, with any pullback should be shallow towards 104.70. The dollar yen was also somewhat lackluster, as you can see, capped by the 135.40.70 area. Although I don't see this as a resistant level, but I feel the market may actually find more of a cap around 136, and therefore any upside potential should be weak, as the technicals are not supporting this current move up, and therefore could see an easy pullback to 131 and reassess. All eyes look to this Wednesday's UK inflation number, which is expected to be a whopping 9.1%, with the previous at 9%. If the number does come out strong or stronger, it could see further pressure for the Bank of England to lift rates by 50 basis points. Looking at the technical pattern, I still feel the market is bullish and therefore looking for a rise up towards this trend line, which is somewhere around 124, figure 15, and with any pullback to be shallow around 121.70. Looking at the sterling Kiwi, the market was relatively whipsawed yesterday as the ball stepped in front of the level around that 191 figure 30 and ended up posting a dragonfly doji. In fact, the market is actually still holding its gains and therefore could see a rise up towards the region of 193.95 to 194.55.80, where I expect the market to foul around this region and eventually see a turnaround and look back towards that bottom side of the range at 191 figure 35. Gold is a little bit on the wobblier side, as we can see on Tuesday, with the market easing back towards that support level seen at 1,830. A break here would give the bulls a little bit more of a blow to see the bears come back into the range and push lower, and therefore look towards the bottom side around 1,800, with the base holding around 1,889 to 91. Any advancement should see a resistance around 50.52 and expect to see a cap around 1,860 to 62 and a firmer cap at 1,880. Finishing up with oil, well, the market went back to test that level of 109.70.90, which was the break level on the downside. And from the rejection, as we can see at present, could see another down test. If this does eventually turn into a flag, with the Powell being relatively strong, being an outside range day, then we could see a further downside move. I did say I was neutral yesterday, but assessing how the price is actually starting to unfold, then we may or could see, that is, back towards that 104 figure 30 and reassess from there. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.